Thinking Byzantine here, and today we'll be going over the Invesco QQQ Trust Series 1 ETF. Now for a quick disclaimer. I am not a financial advisor and I'm just expressing my opinion. The information I will be using is from 12/2/20 or December 2nd, 2020. The methodology of QQQ is that it does not include financial companies and is generally underweight most other sectors except tech. It also uses a modified market cap based weighting system, which means the bigger the company, the higher the concentration of that stock in that ETF. Now here are the stats of QQQ. It was made in 1999, has a 0.2 expense ratio, over 150 billion in assets, liquidity of around $10 billion, a current dividend of 0.55%, a current share price of $303.85, and an average return over 5 years of around 22.43%. Now, why would you invest into QQQ? Well, for one, there's no financial companies or oil companies, which means this ETF has been less affected by COVID than other ETFs like the S&P 500 ETFs, like SPY. It's very liquid, so you can day trade and do options very easily. And it's also very tech heavy, which has been implied to be doing very well recently. Why would you not invest into QQQ? Well, it's tech heavy, and people who are more value orientated may not want this much exposure to tech. And same for the people who generally want to diversify their risk and not put everything into one sector. Also, it has a small dividend yield because of its large weighting into tech, and it has an expense ratio greater than an S&P 500 index. Now here are the top 5 holdings. Apple at 13.39%, Microsoft at 10.76%, Amazon at 10.66%, Alphabet at 6.73%, Facebook at 4.26%. And unseen here, the sixth biggest holding is actually Tesla. So for all you Tesla fans, QQQ may be the ETF for you. Now here's the sector weighting. Overweight in tech as usual, and it has 24.25% in consumer discretionary, healthcare at 6.5%, consumer staples at 4.67%, industrials at 2.11%, communications in 1.22%, and then finally rounding this out is utilities at 0.61%. Now here are the alternatives to QQQ. We have QQQM and SPY. Now, QQQM is a recent ETF. It was only made in October. It has an expense ratio of 0.15%, only around $350 million in assets. It has an average trade volume of around $7.06 million. I couldn't find its current dividend yield, but I'm going to assume it's going to be quite similar to QQQ. A current share price of $124.84, and an average annual return over 5 years. Well, it's a new ETF, so it hasn't even existed over a 5-year period. But if I'm going to back test this ETF, it probably look very, 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 very similar to QQQ. Now as for SPY, it was made in 1993, an expense ratio of 0.09%, which is 2 times smaller than QQQ, assets of over $300 billion, more and double the daily volume of QQQ, which means SPY is more liquid in QQQ, a current dividend yield of 1.56%, which is bigger than QQQ, a current share price of $366.79, which is more than QQQ, and an average annual return over the 5-year period is 13.89%, which is less than QQQ. Now here's QQQ versus QQM, and as you can see, it basically mirrors each other. And that is because QQQM is basically a cheaper version of QQQ with a slightly less expense ratio. And I'm going to have to guess QQQM would be a cheaper way to do options, but QQQ is way more liquid. So for you option traders, I would be sticking to QQQ. Now QQQ versus SPY. QQQ has been outperforming SPY mainly because of QQQ's weighting into tech, which has been performing super well this year. Now here's for a quick wrap up. QQQ is a decent buy and hold ETF. QQQM is a decent alternative to QQQ for those who don't want to day trade. And QQQ seems very COVID resistant, mainly because of that tech holding it has. In any case, like and subscribe for more content like this, and have a good day.